What I don't understand here, Peter, is why we don't have American citizens with pitchforks realizing they're being robbed, heading down to Washington's Capitol Hill in a very bad mood.
No, look, the American public is just not waking up to what's going on and how their rights are being stripped from them, and the government is destroying this country. And getting back to the economics of it, even if the government did have the constitutional authority to do this, and even if even if Paulson legally could do this, he shouldn't, because deal hazards are wrong. The principles are wrong. You don't prop up failed companies. You don't punish successful companies. Basically the government ends up raising taxes on other companies that are profitable. So to prop up companies that are unprofitable, you subsidize this activity. What's going to happen if we put GM and Chrysler on the public dole? They'll never get their act together. They'll be completely dependent on government money. Government money will subsidize the manufacturing of unprofitable cars that people don't want to drive. It'll subsidize high pay for executives and union workers, and it's going to be an open-ended black hole government program. We'll be pouring hundreds of billions of dollars down that rat hole over the years, and of course it will prevent the restructuring that is badly needed in those companies. Only the free market can impose the right solution, not the government. I mean, this thing is wrong from top to bottom.
I once surprised, too, Chrysler's hooked up with Cerberus, one of the biggest capital groups in the world. They've got $1 billion in the bank, or $1 zillion. Why are we bailing out Chrysler if Cerberus is the
they bought Cerberus, made a bad decision to buy Chrysler from Daimler, which made a bad decision to buy Chrysler in the first place years ago. And now, they realize that they made a bad decision, and they don't want to throw good money after bad. But apparently Congress is willing to do it because it's not their money. And, again, the whole concept that Congress should act as some kind of investment fund, that they should make investments. Because I hear people saying, well, this is going to be a good investment for taxpayer money. Taxpayers will make a profit. Again, that is not a function of government. Right. If you want to invest money, send it to a money manager, send it to a mutual fund, do it yourself. Congress is not there to take our tax dollars and make investments. That's not their job.
Yeah, it's just,
and they don't know anything about it. I mean, if they were good investment managers, let them make their money on Wall Street. Forget about this.
Well, unfortunately, it's spreading around the world. We're having it go in Canada, now bailing out some of our banks and our companies that deal in cars. I see it's happening, thinking about in UK. This is a disease spreading around the world, Peter.
Yeah, well, we're leading the world down this primrose path of socialism and mass inflation, and we're the ones that are exporting all these economic problems. Remember, the world is in trouble now because they loaned us trillions of dollars and we blew the money on consumption, and we can't pay it back. And there's this giant financial crisis because Americans have squandered the world's wealth.
We talked to you starting 5 years ago on this very thing, and you warned us of all that's come to pass. I guess it doesn't give you much comfort that you were bang on with all your predictions. It must be kind of sad.
Well, a lot of the dire predictions haven't even come true yet. This is just getting started. It's going to get so much worse. And unfortunately, the worst thing about it, and what I've always predicted, it's not the economic collapse that I feared. I mean, I knew that was going to happen, and I knew ultimately it was going to be beneficial for the long run. Right? We needed to purge these excesses for our economy. We needed to go back to a sensible, sound economy. We needed to save our money and produce stuff. We had to stop borrowing and consuming. But what I really feared, and my worst fears are now being confirmed, was the steps that the government would take to try to artificially prop up the phony economy and prevent the market from functioning. That is what is happening now. The reason we are going to have such a devastating depression and such massive inflation is not because of the market or because of what's happening now. It's because of what the government is doing to solve the problem.
Also, too, here we have a lame duck president who's got a couple of weeks in office, and he's cramming all this stuff down Americans' throat before we have a new administration. That doesn't sound even kosher to me either.
No, but of course, Barack Obama is going to just do more of the same when he gets in. It's ironic that he campaigned on change, and there's not going to be any change. He's just going to do exactly what Bush has been doing, only on a grander scale.
Look, at all my assets in the United States are falling, so I've got my U.S. investments. What are you telling your people at Europac to do with your U.S.-based investments, Peter?
Well, sell them. I've been telling people to get out of U.S. investments for years, get out of the dollar.
Yeah.
The dollar's rallied over the past, 6 months.
Yeah.
As this crisis has begun to unfold, that rally doesn't make any sense to me. I didn't forecast such a strong rally, but I don't think it will last. It might be in the process of falling apart right now. I think people should take advantage of the temporary strength in the dollar to move money out. Certainly, I didn't expect long-term bond yields to get this low in the face of massive deficit spending and money printing, but the fact that it's happened, it's certainly an opportunity for people who were foolish enough to be in U.S. Treasuries, and despite their foolishness, have decent profits right now. They should hit the bid and get out and move their money offshore, get into foreign currencies, get into commodities, get into precious metals. There's a lot of foreign stocks right now that are trading at very low single-digit multiples, 2, 3, 4, 5 times earnings. A lot of stocks that have dividend yields around the world, upwards of 10%, some upwards of 20%. These are the kinds of stocks that we're buying for clients all around the world. I think these are bargains of a lifetime, particularly in countries like Hong Kong and Singapore, Australia, where a lot of the stocks have really been beaten up. I think, people need to take advantage of these opportunities while they're here. And, if they don't know how to access them themselves, they can certainly talk to my brokers at Euro Pacific Capital to learn about these opportunities and how to get your money out of the dollar.
Major oil producers still something that's attractive to you, even with the oil being beaten down to around $50?
Yeah, I think this is a temporary situation with oil. I think it's the result of a lot of deleveraging of a lot of speculative positions, and I think a lot of speculators are also shorting oil. They're jumping to an erroneous conclusion about a global depression that is not going to materialize, in my opinion. I think we're going to have a U.S. depression, but I think the world, after they digest these financial losses, I think the world will be in much better shape, and I think there will be solid economic growth outside the United States, despite the fact that our country continues to mire beneath the weight of excessive government and misguided monetary and fiscal policy. So I think that oil prices are going to rebound sharply by next year, and I think because of this big drop, I think what's happened is that a lot of exploration and development projects, as well as alternative energy projects, have been shelved or put on the back burner, and I think they're not going to be resurrected for many, many years because people are going to be afraid of another big drop. And so I think ultimately what's happening is sowing the seeds for an even greater supply and demand imbalance in oil and other commodities, and even bigger bull markets and higher prices.
The little book of bull moves and bear markets, Peter, you mentioned right in the middle of the book here with commodities for your readers out here. Really, you get an investment twofer, really a time-honored inflation hedge and a super bull market down the road, don't you?
Yeah, I think, and of course there's been a pretty big correction recently. Sure. Although if you look at how gold has held up, I mean, gold has done extremely well. In fact, gold right now is actually trading for a higher price than platinum for the first time in, I don't know how many years. It rarely does that happen. Right. But I think the fact that gold has been so strong against other commodities, base metals, energy, agriculture, the Dow, gold made a new high versus the Dow for this bear market, the Dow bear market. I think it's a reflection that people are figuring out that this inflation story is real. The deflation stuff is a bunch of nonsense. It's a straw man. It's a smokescreen. That what people have to worry about is debasement of money, as money is losing purchasing power, as politicians all over the world are printing this stuff like crazy, hoping to print our way out of these troubles, and it will not work.
As we head down the pike here, one of the most fascinating chapters in the new book here, Peter, is a decade of frugality. What do you think is coming down in the change of lifestyle for us rich and mighty folks?
Well, that's what's happening. In fact, I read in the and it was the USA Today. I've got it on my desk. There's an article today that talked about how American consumers have paid down debt for the first time. It said Wall Street Journal. American consumers have paid down debt for the first time ever since they've been keeping these statistics in 1952.
Yeah.
So Americans, instead of going deeper into debt now, for the first time in 50 years, they're reducing their debt. Now, that's ultimately a good thing, but this is what I talked about, the decade of frugality, in that Americans are going to start paying back the money they borrowed. And this is not just a one-time aberration. This is going to be happening for years and years and years because Americans are broke. Their home equity is gone. Their stock portfolios are decimated. They have no savings. They're loaded up with debt. The only thing they can do is start to save money, pay off debt, build something for the future, for retirement. If they want to, whatever their long-term goals are, they have to save for them now. They just can't buy a house and just assume it's going to magically appreciate and pay for everything. So Americans are going to be spending a lot less money because you can only save more if you spend less. Mm-hmm. And so people are going to be a lot more frugal. They're not going to eat out as much. They're not going to travel as much. They're not going to buy new cars as often. They're not going to buy new clothing as often. They're going to get by with things. And, that's not going to be a bad thing, but ultimately it's going to require a lot of changes in the economy, because obviously people who work in the restaurant industry, in the retail industry, that sell cars, that work in the real estate industry, a lot of these people are going to lose their jobs because their customers aren't going to be there anymore. And so it's going to require a restructuring of our economy, and the government needs to get out of the way and allow industry like General Motors and Chrysler to restructure so that we can hire a lot of these fired workers in the service sector. I mean, we can have 2 or 3 times as many people employed in the auto industry as we have today if the government gets out of the way and allows the free market to dictate wages in the auto industry and not the labor unions.
Let's do a Buzz Lightyear here in your new book too. To infinity